Hello, this is Jordan, and this video is being recorded on late Wednesday afternoon, July 13th, 2022. Thank you so much for joining me today. In this video, I'm going to talk about how we can pinpoint the bottom in gold stocks, or at least try to pinpoint it. And so the fundamentals are obviously very important, and if we look back at various bottoms in precious metals, there was a fundamental development around that time. If you look at the end of 2015 bottom, the Fed started hiking rates, and you look at historically, a lot of times when the Fed starts hiking rates, that can be a significant bottom in the market. Not always, but it can be. You look at 2018, precious metals bottomed 4 months before the Fed stopped hiking, but they really started to perform well after that. After that December hike, then they really surged when the Fed started cutting rates. I mean, you go back to there was a consolidation after 2006, then the Fed started cutting in 2007. Precious metals did really well. Then the Fed started cutting to zero in September of 2008. So going on and on, but Fed policy shifts tend to coincide with major lows or at least interim peaks in precious metals. So that's why I'm so focused on, Fed funds futures and what the market is saying about Fed policy. And the Fed, obviously the Fed drives it, but they're also following the market. So the market is kind of the Fed whisperer as far as, the Fed funds futures. You could say they're the Fed whisperer, so to speak. So we had the 9% inflation reading. Obviously, it's very backward looking. And so what happened today is what the market did is the market accelerated the rate hikes, brought them forward, but at the same time brought the rate cuts forward. And so what we mean is, and these I think are the key points. These are obviously shifting every minute, every hour. But, a couple hours ago, I saw 67% chance of a 100-point hike coming up in the next couple of weeks. I saw that data was as high as 80% at one point. So, you would think that would be really negative for precious metals. But, more importantly, what precious metals might be reacting to, you have a 60% chance of the Fed pausing in November. Now it looks like, the peak of the Fed funds is going to be in December. So it looks like December could be the last rate hike at this point. But there's still a 60% chance that it's in November, which is pretty high. And at the same time, rate cuts have been brought forward. So now you have the market is implying, these future contracts is implying that by March of next year, you're going to get the first rate cut. So all of this is important because if we look at what's happening, the yield curve is inverted. The long end of the curve is rising. People are worried. Big money is worried. So they're buying long-term bonds. We look at, commodity prices have been declining aggressively. And something I pointed out in my interview today, if you look at break-evens in the bond market, which reflect inflation expectations, break-evens have been coming down so rapidly that there's a statistic I used in my premium update where one of the break-evens has fallen by, I think, over 1% the last couple months. And the only other times that happened was during COVID and during 2008. So with the way that commodity prices are declining and what's going on in the bond market, this is signaling that inflation is going to come down significantly. And so obviously, they're going to hike in July, but, coming up September is 2+ months away. That's 2 more months. And if we get more data of inflation crashing, or if economic data, which is going to be more key, if that's really concerning, we get a negative GDP for Q2, all these things can bring up these bring forward these expectations of, what's the next step? Okay, well, the Fed's going to, the next step could be November's their last hike, and maybe they'll cut in December or January. So, again, these things can change significantly, but if you look at the last 6 weeks, they're shifting aggressively as far as, the Fed stopping and rate hikes being pulled forward. So, the Fed hiking 100 basis points, who knows? That really could be the last hike. But let's get into some charts. I'm sorry for babbling. So here we have GDXJ, and we have some breadth indicators. These are custom ones that I track on my own, so you can't get these. We have the daily line chart there at the top, and then we have the indicators below. 52-week lows in GDXJ, smooth with a 10-day moving average. And we also have the percentage of stocks above the 200-day there, and at the very bottom, percentage of stocks above the 50-day moving average. Both of those are smooth by 20 days. So let's just start with those. Look at how oversold GDXJ is. Basically, since this data going back to 2014, the percentage of stocks above the 50-day moving average, that's the lowest it's ever been since I started tracking this data. And the same thing, the 200-day is basically at the second lowest point since the end of 2014. So those indicators are really, really oversold. And at the same time, look at new 52-week lows. Last week, there was one day where I think it was 58% of GDXJ stocks made a new 52-week low. And that was tied for the highest since 2014. It was tied with 2018. Now, if you look at a 10-day moving average, and it's also similar if you use a 20-day, but a 10-day moving average, you can see the blue line there. That is the highest since the end of 2014. So these indicators are telling us GDXJ is essentially the most oversold that it's been since the end of 2014. So that's really, really significant. When it gets that oversold, you're going to get a rally. And today looks to be the start of that rally. And, looking at, what was today the bottom, if we're looking at how oversold GDXJ is, that's certainly possible. But markets tend to bottom. They tend to bottom after they get, they're really oversold. The most oversold a market gets, many times it makes a low after that that's not as oversold, and that's the bottom. So that's potentially something, we could look for. And so if there is another low coming, looking at the chart of GDXJ, it traded as low as in the high 29s today, 26.27. That should be really strong support. That's really key support going back to 2014. So again, it's just if there's another low coming in this market, it could be at 26 to 27. That's something to keep in mind. Now, with the gold price, it's interesting to me because gold is not, the stocks, GDXJ, the Huey, their oversold condition is, with respect to GDXJ, it's the most oversold it's been in basically 7 years. The large caps, GDX, the Huey, those are a tad less oversold. I'm sorry, I'm not showing those. But if we look at gold itself, the net spec position has decreased significantly. But if we look at as a percent of open interest, which is not showing here, if you go back to the bull market in the 2000s, a lot of corrections bottomed around 20-25% of open interest. So I think the last percentage reading I had was 33%. So I don't, and also looking at, there's some sentiment indicators, which they're pretty oversold, but they're not extreme. So looking, not looking at the stocks, so I'm looking at gold, I would see potential for there to be a low after this. But nevertheless, gold is making a bullish hammer here on the weekly chart. And it's, the sector's really, really oversold. So it should be able to rally up to 1780, I think, maybe 1800. That's going to be the first significant resistance. And gold is bouncing off the equivalent of the 40-month moving average, which is in the 1720s. But then you also have 1675. So these are levels to keep in mind over the coming weeks. I don't know if this is the bottom or a bottom or the bottom before the coming bottom. But, we'll see how the market digests economic reports and the economic data that's coming. That's going to play a huge role, because if we see, if over the coming weeks, if it's immediate that these Fed pause and rate cut expectations, if those get brought further and further forward and they're getting closer and closer to us, that's going to coincide with a bottom in this sector. However, if it takes a little more time and maybe the Fed can still hike in September and that's the last one, then you could see another round of selling in this sector. But, whatever you're looking at, it's definitely really, really oversold, and a huge significant shift is coming. But, we have to be mindful of the possibilities. Thank you so much for listening to me. It's a little longer than I wanted. Follow all my work at TheDailyGold.com. Leave a comment. Let me know what you think, and I'll talk to you in the next video.